So 2016 has been a year in which fundamental issues, fundamental valuation issues have been subordinated to momentum. We're in a very momentum-driven stock market. Whenever that happens, it puts enormous pressure on fund managers, not least because so many of us are in an industry that requires performance to be delivered continually. And that's not possible in my view if you're going to add value in the long term. So when markets become momentum driven, that's the time when you need to have your investment anchors securely in place. My investment anchor is driven very much by valuation and a long-term perspective on valuation. So through 2016, as share prices have become more detached from fundamentals, that has made me more confident about what we can deliver in the long term. But it's tested my resolve, certainly through 2016, and tested our clients' resolve as well. 2016 has been a disappointing year from a performance point of view. So the share prices of the businesses that we're investing in have not performed as well as I would have hoped. And as a result, the portfolio didn't keep track with the stock market. We were up a bit, but not as much as we would expect to have been. But there is an important message in what I've just said, which is that the share prices didn't perform terribly well, but overall the portfolio has made very good progress, underlying progress in terms of the businesses that we're investing in. When I look across the portfolio from the smallest businesses, some of the unquoted that we've invested in, up to some of the largest quoted companies, what I saw in 2016 was good underlying progress. Not everywhere, because there have been some disappointments, and those have been reflected in big share price fall and some profit warnings. But in general and in totality, the underlying progress in the portfolio in terms of the business progress has been very good. You obviously have to test your hypothesis all the time. But the way you test your hypothesis is you have clearly a set of assumptions that support the case for the shape of the portfolio, the stock selections that you've made, and indeed the ones that you haven't made. And you test that all the time. And the way you test that is to see how the evidence accumulates. Are the companies delivering what they said they would deliver? And are the businesses that you aren't invested in, are they performing in the way that you'd anticipated? And I mean from a fundamental business point of view, not from a share price point of view. And that's how you test your hypothesis. Now, not everything goes according to plan, not everything by any means. And some things have not been good in 2016. Capita was a good example. Next, another good example of businesses that did not perform as well as we'd hoped. But as I've said, broadly, the portfolio has delivered really well in terms of fundamental performance relative to our expectations. And whilst we continue to see that evidence accumulate, that the businesses that we're investing in are continuing to deliver the things that we wanted them to deliver, share prices will always catch up with reality at some stage. They always do. In the end, the only thing that really matters is fundamentals. Throughout my career, there have been some extraordinary opportunities that I've had the good fortune to capture, and one of them would have been during the technology bubble. There was a period then when fundamentals didn't matter at all and markets just became completely momentum orientated. There was no price that people wouldn't pay to be positioned in technology stocks, and no price that they wouldn't sell shares that were focused on the old economy. And in a similar sort of way, maybe not to the same extreme, but in a similar way, we have seen 2016 play out like that. Valuation has become significantly less important, indeed arguably irrelevant in this sort of post-Trump period. Momentum has driven share prices, not fundamentals. It's always a really testing time for fund managers, active fund managers like myself, but it is always the best opportunity to add long-term value.